Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Live Nation stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 23 billion market cap. They're trading at $98 a share and they have 232 million shares outstanding. Live Nation generates revenue from concerts, ticketing, and sponsorships. The concert segment promotes live music events in their own venues as well as rented ones. They operate and manage music venues, produce music festivals, stream content, and they also offer management and other services to artists. They sell tickets for music concerts, sports, performing arts, museums, etc. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow was really solid in 2022, 1.6 billion. Amazing margins, 26%. That means they converted 26% of their revenue into free cash flow. Their margins dropped a lot, down to 9%. Free cash flow 1.5 billion. It dropped again to 900 million, dropping again to 500 million. The reason their free cash flow is going down is because they're investing a lot into CapEx, not because they're losing more money. Net income is the profit or loss on the income statement. It's revenue minus expenses. Negative 700 million in 2022, but they turned that around. Positive 150 million. Then it goes up 112% to over 300 million. It came down a little in the trailing 12 months to 256 million, but at least it's positive. Razor thin margins. They only convert 1% of their revenue into net income. Revenue is a sales for the company and it doesn't get much better than this. From 6 billion to 24 billion. Amazing growth. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 29 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company at $25 billion. We divide that by 232 million shares. And we get a calculated stock price of 109. They're trading at 98, so they're trading at a 10% discount. It's a buy according to the model. Do you think it's a buy or sell? Let me know in the comments. Simply Wall Street is really bullish on this one. They're at 181 a share. They say they're 46% undervalued. 20 analysts priced this stock at 117. They also say it's undervalued. There are 42 companies in the same industry as Live Nation, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a lot on CapEx, 570 million, more than Netflix. We can't look at a debt to equity ratio, negative equity, which means their liabilities are higher than their assets. They don't pay a dividend. 548 million of free cash flow, less than the average, a lot more than the median. They rank third in market cap, far behind Disney and Netflix. We can't look at their price to book, negative equity. They're trading at 89 times earnings, which is a lot worse than the median average. They're trading at 41 times free cash flow, also worse than the median average. They are trading at 1 times revenue, which means their revenue is pretty much equal to their market cap. And they're growing a lot. Their 5-year annual revenue growth rate is 16%. Here's their latest income statement. The second quarter of 23 compared to the second quarter of 24. Revenue is up from 5.6 billion to 6 billion. Cost of revenue is 4.4 billion. That's also up. SG&A, which includes marketing, 926 million. Depreciation and amortization, 140 million. Their operating income has improved from 386 million to 466 million. They spent 80 million of interest on their debt, which is less than last year. Their pre-tax income, 450 million, 80 million of taxes, net income, 376 million, up from 331 million. EPS went from 104 to 105, and they are adding shares. Not much, but they're adding a little bit. 228.5 million, now it's 229.9 million. So to summarize, I have them trading at a 10% discount. I give them a ranking of 7 out of 10. Would I buy them 5 out of 10? I really like the business model, but I need a little more time to get comfortable with the company. Ratio is pretty weak, 3 out of 10. Really bad PE and price to free cash flow, and we cannot even look at the price to book. Financials 8 out of 10 because their revenue is up 280% since 2022. Free cash flow is down, but that's mainly because they're investing a lot into CapEx. As long as they can maintain positive free cash flow, I'd feel pretty comfortable. But of course, at some point, I would expect their free cash flow to grow a lot. Lots of companies have negative free cash flow or really low free cash flow in early years, and then it balloons a lot as they stabilize. So that's the end of the video. Let me know what you think. Give it a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.